Joining us today is Ashish Kyal, the Chartered Market Technician, author, Wave Strategy Advisors, to answer all of your stock queries. But the first question, Ashish, is coming in from Sri Hari, who's writing to us from Hyderabad. He holds 35 shares of Sterlite Technologies at 59 rupees, and he is making a profit on that. And he's also got 17 shares of Aeroflex Industries at 154 rupees a share. And he's making a profit on both these stocks, right? He is willing to hold this for another 5 years and wants to know the long-term outlook on both of these stocks. So, Ashish, these two stocks, these two names, what do you think he should do? What key targets should he watch out for? Should he book some profits or continue hold for the long term?
Hi, afternoon to you and all the viewers. If you look at Sterlite Tech, the stock, if I heard it correctly, is holding from around 39 levels. That has given an exceptional move on the upside. The stock is currently around 580, so it has moved out extremely well. But having said that, over the past few months, if you look at the movement of the stock, it has moved more in the form of circuits and in the form of upper circuits. And so I would suggest it's better to be booking out at least half of your positions from here on, because in case the stock starts lower circuit, you will not be able to exit and you are making spectacular move returns on this one. So Sterlite Tech, my suggestion would be book half partial and trail the remaining with a stop loss on the downside, which is going to be around 520 levels, and then expecting a target of around 750 on the upside. The next stock is Aeroflex Industries. We can clearly see the stock has moved from around 160 levels, moved to around 520, made that high and showing some kind of a short-term profit booking there, but continue to hold. There is an important price action support for the stock around 430. And from the long-term perspective, we can expect it to move towards the level of around 600 or maybe higher. So hold on to Aeroflex Industries as of now.
Okay, that's a word coming in there for both the stocks, Sterlite Tech as well as Aeroflex Industries.
Your view on Tata Motors CV and PV at this point in time, he is looking at it from a 6-month perspective?
See, from 6 months perspective, we can clearly see the Tata Motors commercial vehicle is showing relative outperformance to passenger vehicles. Very clearly can be observed that, and the stock has fallen only in the form of a 3-wave correction, which means the overall trend on the upside is still intact, and we can expect it to reach towards the level of around 500 on the upside, with the stop loss can be maintained at 400. So the risk reward is also good at the current levels for commercial vehicles. Having said that, passenger vehicles has shown some kind of a subdued behavior. Just as a disclosure, we do have holdings on the passenger vehicle and commercial vehicle, both of Tata Motors. But passenger vehicle has shown some short-term correction, and the time horizon for this stock has to be extended at least for a year and a half more. And we can clearly see then the stock can outperform, move towards the level of around 460 to 490 on the upside. And on the downside, the support for the stock is at 300, which is a very important low.
All right.
Ashish, any thoughts coming in here as well for the demerged entities, Vedanta Aluminum, Vedanta, and the power side of Vedanta as well? What would you be looking at?
See, right now, if you look at the overall data, there is not much. There is hardly 6-7 days of data available with us, so we will not be able to forecast what's Vedanta Aluminum or others might look like. But Vedanta Limited, if you look at that stock, it has shown a good correction from 360 levels, now trading somewhere around 278. So I would suggest Vedanta Limited can be looked at as the main entity, which has shown a good returns to the investors, and continue to one can invest into this stock and expecting a target of around 300 on the upside.
So looking at Vedanta Aluminium there. All right, Ashish and Gaurang, thank you so much for joining us.
On the technical front, Ashish, would you also suggest the viewer to continue?
Yes, if you look at the overall stock, I think it has formed a double bottom around the levels of 100, showed an uptick, but the momentum is yet to pick up. We can clearly see the PSU banking space is showing some kind of a lagging behavior in terms of performance, but I think that should eventually change and we can start seeing an outperformance again from this PSU banking space. PNB on the upside can reach towards the level of around 120 over the near term. On the downside, one can maintain a stop loss at around 102 levels.
Okay, we'll keep an eye out on that level over there. 102 is the stop loss that Ashish has mentioned. Next question.
If you look at the overall chart pattern of Oil India, we can see very sharp decline over the recent past few weeks, and the stock has corrected sharply, but it has come also towards a very important price action support area, which is around 380, 390 zone. So I would suggest hold on over here. Maintain a stop loss of around 380 levels, because that's a very important support area which has been protected since the past year. And on the upside, once the stock manages to break above that 435 mark, we can expect it to again show a pullback towards the upper end of the range, which is at 500. Hold is the recommendation right now.
Hold is the recommendation right now coming in for Oil India.